Okay, peeps, welcome back. So today we're going to be going over some high yield dividend ETFs or dividend stocks. I guess in this case it would be ETFs that we personally own and how they've performed over time in our portfolio. So with that being said, let's get it. All right, so before we get into that, I first wanted to show you guys a stock that we are looking at purchasing tomorrow morning. By the time you guys see this, it'll pretty much almost be market open unless you have a membership, of course. If you have a channel membership, you can see the content anytime you want, so you'll be able to see it immediately right after we upload. But you'll be able to see this before market opens, so you can make a choice as to whether you want to get into it or not. And that stock that we're looking at, which is considered to be a meme stock like AMC and GME, is FFIE. So this is one that's being talked about heavily in the meme community. And again, meme stocks is something we normally don't do. Meme crypto tokens is a different story, like Shiba Inu and Dogecoin. We had those in the previous bull market cycle. So we're used to that. Okay. We don't usually buy meme stocks though. So for this, for us, this is a relatively new thing. So anyways, let's get into it. So we do not really know a whole lot about this company, so we'd have to look into this first. But what I want to show you guys is this. So let's take a look at the price action that this thing had. So you guys can see this thing absolutely exploded. And I mean, just exploded. This is ridiculous. Like this is even more bullish than AMC and GME by a long shot. Okay. This thing went from 6 cents, 6 pennies, to almost $4 in a matter of days. Okay. 4 days, 6 pennies to $4. Absolutely ridiculous. Okay, this is usually something you would only see in crypto. You don't usually see this in stocks. So I'm going to give you guys a rundown of just how many multiples that is. So that's a 66.5x on your money. If you had put in only $100, and again, $100 is not a lot for anybody that invests in the markets, you would have been looking at pretty much about $6,700. Okay. And that does not include if you did options on this. If you did options, the potential gains that you could have made could have been multiplied even more than that. And this is assuming that you timed the bottom and the top perfectly. But what I wanted to point out to you guys is this. So if I go over here to the sell put, and again, this is for the 33 days. So basically this would cover an entire 30-day month. Because unfortunately, this is a penny stock, so it's extremely risky. There's a risk of being delisted and all kinds of other stuff. But you can't trade this on a daily basis or even a weekly basis like you could something like the Bitcoin miners or the SPY, for example. So the earliest time frame we have here is the 33 days. Okay. So we were actually considering doing sell puts on Mara in the morning until we saw this. So the amount of money that we had in tomorrow was about $1,900. And again, with the current price of FFIE, we basically do an at the money put at $1, so 13 cents below market value. And we would receive $1,170 in options premiums. I guess they call it credit here on Robinhood for a 30-day time frame. So that's basically about $300 a week. And if at the end of those 30 days we get assigned, of course, we would have them at $1. Let's say the stock's at 50 cents. Okay, it's not that hard to buy more shares at 50 cents, right? It's pretty cheap. But we would essentially get roughly about a 60 to 65% return on our money. Again, 65 cents is 65% of $1. And if I go over here to Mara, so Mara, as you guys can see, $19.30 per share. If I go do the same thing with a sell put and I go over to the 5-day time frame, again, this is basically just a weekly time frame. You can see 1850 here. Relatively conservative delta, 32. I could go lower, but again, the premium's not that great when you go lower. So again, 54 cents. If I basically time this by 4, assuming that it's 4 weeks, it'd only be $250 a month, which is still good money, but compared to $1,150 for a stock that could potentially do like a 10, 20, 50x, yeah, I'm starting to think maybe FFIE is going to be the stock of choice for tomorrow morning. So again, you can see the crazy run up here. Basically went from pennies all the way up to like $4 here. And if if I think what's going to happen is going to happen, that basically the run up for GME, AMC, and this stock included is not done in the immediate short term, that it's going to last for another 1 to 4 months, somewhere in there, then I suspect that FFIE is going to go way higher. Okay. And the shadow wick here is a clear indication that it could go higher. As you guys can see, the shadow wick, or the wick, as I like to call it, the long wick here, is above the previous kind of structure level at 350. So that indicates to me there is serious potential to go higher. But what I want to show you guys is just how far down the stock has gone. Am I saying it's going to go back up to 4,000 or 5,000 or even $1,800 a share, or even potentially up here to $300 a share? I'm not saying that. I don't know how high it's going to go. I don't think it's going to go up to 5,000, but it just goes to show you how much this thing can really squeeze and how much it's been beat down. Okay. So now that that's covered, we're going to go over a few stocks in the portfolio and see how they've kind of performed. So basically what I'm going to do here is I'm going to show you guys the market performance from the inception date to the current date. And then we're going to go over how much our drawdown is on each one if we have one, and how much we're add the dividends in for the total return and see whether we're at a negative or a positive. So I'm only going to do this with positions that we have a significant amount of money in, because again, that has a large weighting on the portfolio. At some point in time, we'll do an entire spreadsheet of the total return of everything that we have in terms of high yielding dividend paying stocks, but that's going to take a little time to develop. So you guys will have to be patient with us on that. Okay, so first one here, KLIP. As you guys can see, drawdown currently $440. Again, we're pretty bullish on KLIP in the immediate short term because KWEB is at a critical support level that's a decade-long support. So I'm going to throw in here 440. Interesting that it's 440 even. Okay. So I'm going to go over here to the dividends tab, and this will show you guys the history of all the dividends we've received. So we've been collecting dividends since basically August 31st. This does not include any profits that we took, as in selling for higher than our cost basis. Okay, this is just dividends. If we include profits, which will be on the spreadsheet, obviously the if it's positive, it would be much greater. I'll just put it like that. So 97.81, 108.27. Let's see, 104, 95, 102.06, 94.16, 86.26. And yes, I'm aware that the number says negative and I'm doing this backwards, but it doesn't matter. I mean, you guys kind of get the point of what's going on here, so I don't think I really need to explain this. So 92.19 and 79.42. Okay, so just based on this metric alone, with just including the dividends, not profits, we're plus $418.04 on just this account. We have KLIP on another account, but we're just talking about this account today. So on this account, we're actually positive $418 because the dividends have outweighed the drawdown by 100%. So for anybody that says KLIP is not a good investment, well, it really depends on what the total return is and whether you bought shares at what price and whether you continue to add to your position or not. It's much more complicated than just, oh, well, the share price is going down and therefore it must be a bad position to buy. It's much more complicated than that, guys. It's not just like, oh, the price chart goes down equals bad stock. I mean, that's very simplistic thinking. I don't think it's good for anybody to think like that. That's just my opinion, of course. So we'll take a look now at CONY. This one, as you guys know, we're still very bullish on because, again, I don't think the peak of the bull run is going to be until the end of next year. Or close to the end of next year. I just don't think that's going to happen. Okay, so I don't know what's going on here. Give me a second. But yeah, pretty sure the crypto bull run's not over. So 1511. And keep in mind, we have not added to CONY in quite a while. We also have not included profits on this, which we did take quite a bit of profits on CONY. So I suspect with the profits included, not including averaging down, likely we're actually in profit on this position. But just for simplicity's sake today, we're just going to go over the dividends and compare that to the current value of the portfolio. So last transaction here, 188.77. You guys can see by this metric alone, we're actually only currently down $32, so that's not bad. Again, that does not include next month's dividend and so on, or the profits that we take in, or buying more shares on the dip. So I'm only going to go over one of these Defiance ETFs because, again, we'll show you guys all this information in a separate video with everything laid out in a spreadsheet, so it's nice and organized and all that jazz. Okay, so triple QY, we have not added to this for probably months at this point, so we're down 18%, $176, as you guys can see there. On paper, of course, because we have not actually realized the loss by selling. That is an important note to make about dividend investing or investing in general. So you can see all the dividend payouts here, quite a few, and they're pretty large. So $1.10, $33.93, $45.29, $30.52. I think we actually, no, we got paid from this one a couple of weeks ago. I'm thinking of something else. Okay, so $43.72, $41.15. Okay, you can see from just the dividends alone already, not including profits or, averaging down, we're already actually profitable. So even though we're in a drawdown, we are actually still total return positive. So positive $103, as you can see here. And we have not added any money to these positions in quite some time because, again, we've been focused on other things. So if I'm going further down, take a look at another one here. So FEPI, as you guys can see, FEPI, we're actually profitable on this. So not really sure how to start this one. So I will, we'll just do this. We'll start at 924 and then we'll add to it since this is kind of the reverse. Okay, so we don't have as many dividends in this one because, again, for a long time we weren't really adding a lot to it. But, every little bit matters. Every little bit counts when it comes to dividend investing. That's the whole point of the dividend snowball. So 2038. And last one, which of course is bigger. That's always good. 68.90 is what we currently are sitting at in terms of total return. Okay, another one that we have a lot in is YMAX. So definitely going to do the numbers on this so you guys can see actually because they just had a dividend payment, we're actually down 4% as of right now, which again is not really a big deal because this one's actually held up its price pretty well. And we're going to go over that in a minute. So go down here to dividend history. Okay, so 485, 2130, 2135, 4224, 7935. So currently up $55.55. Again, I know that says it's negative, but I'm actually doing this in the inverse way of doing it, which it looks weird, but it makes sense to me. So it's a little bit unorthodox, I know. All right, so you guys already know that Tesla is going to be negative. I can pretty much guarantee that. So we're down quite a bit on this. We would have to add to this to actually get this to break even. Plus they had a stock split. So there's no sense in going over that. Plus the majority of the Tesla that we own is actually on M1. It's not on here. So we'll go over QDTE. So as of right now, plus 198, as you guys can see up there. This is a relatively newer position too. As we continue to build out our positions, we're slowly adding new ones as we go. I'm sure you guys have noticed that, but we're kind of being slow and methodical about it because, again, this is something we want to build over time. So 9 cents, 27 cents, 33 cents, 25 cents, $1.24. Let's see here, 262, and this is a weekly one, by the way. This is not monthly. So for those of you guys that actually own this, you know what I'm talking about. But yeah, so you guys can see we got a little bit of dividends here, but again, these are going to pay out weekly. It's not going to be on a monthly basis, so it's going to appear that the amount is not really that big. And we're plus 198, so we are actually positive on this. So you guys can see that even in the positions that we're in a drawdown on, they're actually still mostly positive. So the dividends by themselves, not including profits taken, actually do outweigh the drawdown. Again, it depends on how much you add to it, how often you add to it. If you wanted to get out of the position, you could add to it as the price is coming down. You could add in at lower prices, and eventually the price will squeeze back up, most likely. Maybe with the exception of the defined ETFs, unless the S&P 500 and Nasdaq just go crazy. And eventually, most of these will squeeze back up, and then you can get out for at least break even, if not a profit. So, in terms of the performance, you guys can see that QDTE opened up at $46 and is currently at $44.46. That's actually not bad, considering this thing came out in March and it's currently May. And the fact that this thing pays out weekly and it's only gone down that much. And you can see it recovered here from the lows too, which is also a good sign. That's something we want to see. In my opinion, that's not terrible. Okay, only down 3.39%. I mean, there is funds out there in terms of high yielding dividend paying ETFs and stocks that have done way worse. So if I go over KLIP, obviously this is going to look pretty bad on the in terms of the price. But I mean, again, China's been kind of having a rough time the last couple of years, so it's not really surprising. Plus, all the quantitative tightening and all that stuff is going to naturally add pressure to the downside on stocks like these. When China's economy does eventually recover, they do QE, all that stuff, and then eventually, there's trade that commences between the U.S. and China again. I suspect this is probably going to go up in value. I can't guarantee it, but that's kind of what I suspect is going to happen. So CONY, this thing has actually done quite well, if I'm being completely honest. Let's go to the max time frame here. You can see it's kind of up, down, all around. That's crypto for you. So we opened at 2031 and we are currently at 2170, as you guys can see, which means that the current price is still above the inception price. That's always a good sign. I do not think CONY is at its all-time highs yet. I do not think that Bitcoin is at its all-time highs yet. So this one has actually performed extremely well. So next one on the list here would be QQQY. This one is obviously going to look kind of bad, kind of like KLIP, because again, the price is going down and or sideways because simply because of the nature of the strategy that's being used on the ETFs. So it is down quite a bit. But again, the dividends that are being paid out, at least for us, I mean, I suppose if you just bought a bunch up here at open date and did not add any on the way down, you might be negative right now. But because the dividends are so huge, at least for us, the total return is actually positive. So I don't think that SPYT is something we're looking at holding, but I don't think that QQQY, JEPY, and IWMY we are going to hold long term because, again, I mean, if it just keeps going on this trajectory, they're eventually just going to have stock split after stock split, and that's not going to be good for anybody. I suppose they could just do it infinitely and still pay out a fat dividend, and you could just keep on DCAing down forever, but I don't really like the sound of that, if I'm being honest. So it's more of just kind of a strictly income play. So FEPI, this one, we actually really like this one a lot. So this one has performed extremely well. It's if I'm not mistaken, I think that FEPI is actually, I'd have to go and do a comparison on this on the charts at a later video, but I believe that FEPI is actually performing almost perfectly in sync with the S&P, so that's very, very good sign for the price. So this thing opened up at 51.67. You guys can see it back here, and the current price is 55, so up 6% all time. That's definitely a plus. And again, this thing has a huge dividend. It pays out about $1.10, $1.20 per month per share, so that's great. And then I'll go over here to YMAX. This is another favorite of ours because we like the perfect balance between price appreciation and the maxed out dividend here. So you can see we've been up pretty high, been down pretty low, kind of in sync with the markets. So opening price roughly about $20, and as of right now, we are still slightly up, even after the dividend payout. So still up 2% all time. That's always a good sign to see. And yeah, I'm thinking that pretty much covers it. As for AMC, we still have AMC. We're going to continue to add to it day over day, little by little. Down quite a bit right now, but I do suspect that the bull run is not yet over for AMC. I think it's got a long ways to go, if I'm being completely honest. There's more to look into it. You guys can do that on your own time. We're not going to get too deep into it here, but I have a feeling that all of the shorts that are out there shorting with synthetic shorts and all that jazz, they're going to have to close soon. They're going to have to close, and the stock's going to squeeze, and it's going to be huge. That's just my opinion. But anyways, hope y'all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.